Well, Netflix trading very strangely after hours. They popped up pretty high originally. We're talking about a nice big movement of 8% upwards at one point. Netflix had popped up, and now they're back down to right around 0.62% up for the afternoon and after hours. So really, they're overall negative for the day. We're going to take a look at those earnings. Obviously, this is a massive earnings report, as I mentioned before. This is a key thing to look at, and we will take a look at what they have to offer here. So, if you look at the numbers here, Netflix Q1 GAAP EPS of $1.57, missed by 7 cents. So, a lack of profitability, but overall, this company's come a long way in terms of actually making profit as opposed to previously when they weren't. So, that's pretty mega there, but you do see a miss in terms of the estimate. And revenue up 27% year over year. They beat by 20 million, so 5.77 billion for the quarter. Not a massive number there in any aspect. Where you do see a big number would be the global streaming paid memberships, up 22%, 22.8% year over year versus the guidance of 174 million. They had a net addition of 15.77 million subscribers this quarter, which is massive. I think it's fair to question there by these paid subscribers. Where do you see the revenue difference there? Because clearly that's not 20 million. 15.7 million. That would be a dollar per if it's this 20 million line. So I don't necessarily know where those estimates lined up in terms of revenue. So I find that pretty interesting. But very cool there. Very good, massive number. I knew they'd see a big uptick in net additions. I knew they would. Obviously, with people locked down, they don't have anything to do but watch television. So, not a mega shocker there. We see that Netflix here was up pretty big early and after hours, despite some of the corona clouds obscuring the radar. Revenues rose nearly 28%. EPS grew to $1.57 versus a year ago 76 cents. So they doubled their EPS year over year, which is massive. Did fall short of the expectations. The estimates were revised upward heavily in recent weeks, so they expected a lot more. So that's why you see that miss there. Nothing too crazy. Global net ads doubled what they expected. They were expecting only 8.5 million ads compared to the 8.7 million ads in the last quarter and the 9.6 million ads a year ago in this quarter. Overall, global paid memberships is 182.86 million. That's a lot of people. It's for the most part, things have gone smoothly as far as this pandemic's concerned, with the product teams relatively unaffected and working on scaled back innovation timeline, but we have seen significant disruption when it comes to customer support and content production. Obviously, people aren't able to film stuff really for the most part. You can't film new shows, stuff like that. So it's understandable, but we'll get to a point where it'll be back to where they can do things. So we'll read the shareholder letter real quick. In our 20-plus year history, we've never seen a future more uncertain or unsettling. So, escalating human costs in terms of lost lives and lost jobs. Tens of millions of people now out of work. Nothing too exciting about this. But you see in March, they created a $100 million fund to help with hardships in the industry, starting with the hardest hit workers on our production, where Netflix has the greatest responsibility. We will have paid these crews for about 7 weeks with the goal of providing a bridge until government safety nets kick in, I should say. In addition, we're donating $30 million to third parties and nonprofits, providing emergency relief to out-of-work crew and cast across the broader TV and film industry. Cast, I don't think necessarily needs this donation, Netflix. I'm sorry. But these people make plenty of money. Just saying. Actors Fund Emergency Assistant. Oh, gosh. That one upsets me. I understand it's more for those actors who aren't making the multi-millions, but regardless, they're still making. Most of these guys, if they're signing on to a major Netflix show, they're making plenty of money. I mean, we're talking more than I make in a year for sure. So they don't need the money. Let's get into the financials here. Actually, on a lovely spreadsheet. It's pretty nice. Pretty nice. You gotta love seeing this spreadsheet here. So we see obviously from this, we care about this balance sheet is what we'll look at. So here in the line highlighted is current assets, which we're not looking at. Total current assets is what I really like to see. But cash and cash equivalents here in line 10. Right now, the most recent quarter you see on the far right, they've got 5.1 billion, which is, again, you can see consistent improvement here, which is nice to see. From a total current assets perspective, you see, again, consistent improvement. Right now at 1.2 billion total current assets. Right now, actually, you see a little bit of a decline in total current assets. Not necessarily fun stuff. You see the content assets completely wiped out this year as far as what they had. So total current assets right now is 6.4 billion. It's plenty. And total assets in general, you see 35 billion, which is their best, most money they've had on that balance sheet. So very nice. From liabilities, current liabilities, total current liabilities right now, they've got 7.8 million. Or 7.8 billion, I should say, which does outweigh their assets by 1 billion. Nothing crazy. Long-term debt on this company of 14 billion. I don't like it. Total overall liabilities of 26.6 billion, though. So their assets actually do outweigh their liabilities, which is finally turning the corner for Netflix. It's been a little bit. They've always been very close to that line, and obviously they're definitely making moves, and they're now, $8.5 billion away from that line. That's major. So they're really doing a great job there. You see overall from this line on this stockholder equity, which is going to be the difference between the liabilities and the assets, it's an increasing number, which is just really good to see. As far as the valuation on Netflix, though, I don't know if it's necessarily something I like still, and I think that's what investors may have seen. Valuation isn't necessarily fair on this company. It's still definitely overvalued. They're getting to a point where it makes more sense as they grow EPS, but I do see them losing. Once we're done with this, I see them losing subscribers. I hate to say that, but it's not going to grow up as massively as it has been. You're going to see subscriber growth loss, a decline in subscriber growth, and could turn negative. Who knows after we get, all this said and done, when people finally have jobs and stuff. I don't know. You might see it go down. But while people are at home doing nothing, they will gladly use them some Netflix and some Hulu. So it's exciting stuff. So I'm not necessarily thinking it's time to buy Netflix. I do think shares are a little bit overinflated, just a little bit. And we're talking about a stock that's trading a P ratio over 100. One that just consistently just skyrocketed. It's been skyrocketing. It has been relatively stagnant since 2016, though, or 2018, I should say, where it's only up 6% since then. But you have seen, if you look actually on the year-to-date on this one, this is a stock that's up 31.5%. Wowee, year-to-date it's up 31.5%, which seems like a shocker with everyone else getting hit and the whole market getting hit. And there will be stocks that outperform the market. I just don't see the valuation on this company, unfortunately. So, alrighty. I hope you enjoyed.